What's going on, everybody? Welcome back to my YouTube channel. So I just wanted to go over just what's happened this morning really on the with the London Open. I mean, yesterday we done the analysis. So for those of you that watched it, you would have known what my thought process was behind it and what we was looking for. And to be honest with you, I mean, a lot of you messaged me and was like, how can you do this technical analysis before London Open? And, the markets might gap and do this and do that. And I've already mentioned to you all, right? When I'm trading, what I'm doing is just I'm looking at the structure of the market, identifying the behavior, and then making a plan. Now, if the plan plays out, then guess what? I'll take a trade. And if it doesn't, then I won't enter the market. It's really that simple. And that's what you should be doing. I'm not just going to sit there and draw support and resistance lines and rely on a Fibonacci to draw it from one point to another and just say, let's wait for this retracement. It's not how it works, right? And if it was that easy, then everybody else would be doing it. Personally, what I like to do is identify patterns that have previously illustrated in the past that they work. Now, how do you support those patterns with the structure? Well, you have to collect data. Once you've collected the data, then you can use that data to your advantage to help you build the confidence that you need in order to trade. Now, if you're taking trades willy-nilly because you think that you're a support and resistance trader or you're a supply and demand trader, and now you just wait for price to get back to a certain key level and look for a wick rejection, that's not going to help support you in the long run. And for sure, it's definitely not going to help you transition because there's growth periods as a trader. And when you're starting trading off and you're trading demo accounts, you then have to transition to the next growth period, which is then trading a live account, dealing with the psychological aspects, the emotional aspects. Then you have to transition to trading a slightly bigger account, or let's say, a bigger account. And you have to deal with the time restraints and the time factors and the time management and the risk management. And then there's just a growth period, right? If you're just taking trades here, there, and everywhere, yes, you may win a few and you may lose a few and you might make money. But I tell you what, if you want to grow exponentially, you won't get very far. So if I make a plan and it doesn't play out, then guess what? I don't take the trade. So for those asking that question, how can I do X, Y, and Z? Well, that's your answer. I just wait for the plan to play out. And if it doesn't, then I don't take the trade. Now, we was looking at Euro USD yesterday, and our bias on this market structure, you probably would have saw was that we were trending to the upside and failing to make new higher highs, right? And this is a great sign that you need to look out for when trading. Now, more often than not, you want to trade at key levels because you get good reactions. But now, because it's Sunday and we're going into, market open, potential gaps, etc., etc., what you want to see the market do is create that momentum. Now, once you get that momentum, then you have opportunities to scale down. And as you can see, we had this reaction as anticipated here. And you can see the market has continued that rally to the downside. Now, I did mention yesterday about stops, buyers in this market, and stops being hunted out. And look at this. We've had this extreme crash to the downside. Now, I'm not going to tell you how to trade this personally. It's down to you to use your strategy. But remember, what I'm teaching you, first and foremost, a disclaimer, is of my own opinion. And secondly, is just principles and guidelines that you can extract what's relevant to you and then use it in the markets. So those that had their stop losses below this level for these buying opportunities, hopefully a lot of buyers would have got out here. If not, as you can see, they would have been absolutely obliterated. And we did call this yesterday, and that's exactly what's happened. In terms of plans moving forward, that's really down to you now. I already said I want to see the market at least get down to some of these lows. So that's what I'll be waiting for. And then tradable opportunities, just use your strategy. But a key factor that you need to look out for here was the identifying mark of this movement potentially happening. And that was a simple fact that price was trading above this brick wall. Remember, brick wall. And any buys above this level would have meant that you was good for buys. As long as you had your stop loss below this level, it's fine. Some people might use it EMA, SMA, moving average, whatever it may be. But I personally don't use it because it's lagging. I prefer to just stick to technical analysis and watch what price action is doing. And the first sign of this was this break. We finally broke below this for the first time in a very long time. This is a first sign here. What's another sign? Another sign is price failing to break above the key level that was created. What's another sign? Price again failing to break above this level. And then look, we have a momentum shift. Once you get this momentum shift, what you need to be anticipating then is what the next candle is going to do. If you had one chance, are you selling this market or you buying this market? You have one trade left. For those that said sell, then you'd be right. Now, does that mean it needs to go down? No. But when you add the confluence together, guess what happens? There's a higher chance that it will go down than it will go up. And all you need is that slight advantage. Once you get that slight advantage, then that's when you can start really zeroing in on building your account, building your portfolio, taking consistent and profitable trades over X amount of time and reaping the rewards, right? So, great analysis there, I must say myself. So, USD JPY yesterday, we looked at this, right? We said trend is down, follow the trend. We already drew in our trend line, our brick wall, and as long as price stays below this, then guess what? We're good to go. Now, we said, where do we want to see price coming back to? Well, we said we want to see price coming back to in and around these levels here. Why? Well, it's a key level in the market where prices reacted to before in the past. You know, it failed to break below, finally had the break, creating that new lower low, and now we had this pullback. Now, when we analyzed this yesterday, this is what price looked like this. And we said what we want to see the market do is come back down to some of these lows. Now, if price broke above this, would we be looking for potential buys? Maybe not, because this is still the current lower high that made the low. So we could be looking for some potential double tops here. And if not, as long as price trades below this brick wall, then you're good for sells. And look here, what happened? Market continued to plummet down and broke this previous structure. So very simple analysis, keeping it very simple, trusting the process here, right? And as you can see, look, trend down, lower lows, lower highs, below the brick wall, key levels being respected, momentum shift, only selling with pullbacks, and now you have the continuation. So something to think about for your trading moving into the rest of the week, guys and ladies. Now, what did we say for New Zealand dollar CAD? Well, we said, look at what price is doing now. We're coming off the back of this uptrend. We can see price now is currently failing to break above these highs. And what we want to anticipate is price continue to push down and create that lower low, lower high trend. Now, granted, price didn't stay below the brick wall, but we drew in the brick wall pretty early when price was in and around these levels here. But now what you can see, or what can you see, should I say? Well, look, price failing to break above, and then during X amount of time, we had price failing to break above these levels. Now, how can you trade this? Well, what you can look for is the momentum shift. You can look for the pullbacks, retests, or you can look for lower high formation trades. And how do you do that? Well, once you scale down to your lower time frames, what you're looking for the market to do is you're looking for the market to create the shift. Once the shift takes out a previous structural low, then you clearly can identify any buyers that traders were taking at these levels as they see or saw fit as being a really strong level of support would have been taken out, liquidity would have been built up, and then you can look to jump into your trading opportunities. Granted, it might be a bit too early now. If you wanted to go in at some of these lower highs, it's completely fine, but you get the point. We're looking at the principles and guidelines here that, you know, we're mentioning so you can use with the strategy that you're using and identify potential trading opportunities. Very simple. Okay, key level trades, look for where price is failing to break above, look for the shift in momentum, look for the tradable opportunities. And again, after this momentum shift, let me ask you, if you had one chance to take a trade and it was your final trade and someone says to you, are you taking a buy or are you taking a sell? What would you do in this instance? Look at this carefully. What would you do in this instance? Would you say you're buying after this just because you're a supply/support trader and you expect price to come down to some of these levels and then you expect price to bounce off? I mean, it's stupid, right? You wouldn't jump in front of a train if it was moving towards you. Well, you wouldn't jump in front of a train, period. But would you jump in front of a train if it was moving towards you? Probably not. And probably no money offered to you would make you question whether you made the right decision not to jump in front of it or not. And this is the same for trading. Like, if this candle is showing you signs, which is evidence of an uptrend, price failing to break above, we have price momentum shift. Granted, this is the break and we had like a gap on whatever and a break back in. But look, how much evidence do you need? Price is failing to make new highs, creating key levels, momentum shift. Now we have confluence, right? I'll just draw it like this for now. No, furthermore, let's just get rid of it. You have confluence now. So let me ask you the question again. What is the direction of the next 1 hour candle? You have one trade. Is it down or is it up? For those that said down, well done. And look, market went down. Now, as long as you had your stop loss above this level, guess what? You'd have won this trade. And I know the risk reward ratio doesn't work in your favor, but understand the principle that I'm trying to get across here. Don't trade against what the market is telling you it's doing. You know, when it becomes obvious, then trade with it. If there's not a pattern or an opportunity to enter the market, then just move on. You know, what to do, move on. GU, I mean, there's not much to talk about with this one. You know, we said that we want to see price continue to push down. Again, same sort of principles. I'm just giving you so much information right now to be working with for the rest of the week. Trend up, price failing to break above structure. We was looking for that momentum shift. A lot of students took this sell on this market structure, and a lot of them took it differently. Some took it on the 5 minutes, some took it on the 15 minutes, some took it on the hourlies, a lot took it on the 1 minute. But the principles remain the same and consistent throughout, right? Market structure and behavior is all the same thing on every single time frame because structure is structure. So how could you take this trade? Well, no, that's not what I'm going to teach actually. But the point is, we analyzed this to go down yesterday. Yes, it had a pullback, and yes, it came back to a key level, but whoop-de-doo. And now we can see the market. When I say key level, I mean here, right? Price pullback created a level where it was failing to continue to push up. And then what are you looking for? You're looking for the momentum shift. Scaling down, how are you going to take this trade? Well, identify key levels where price is reacting from. Look, failed to break, failed to break. Evidence, wicks, evidence, wicks. Take the sell. Let's go down to the 5 minute time frame. What do we see here? We see price failing to break, failing to break, failing to break. Wicks, even more. Good opportunities. Let's get down to the 1 minute time frame. What do we see here? Well, price failing to break, failing to break. Momentum shift, more opportunities. Sells, more opportunities. Sells. Let's continue down. More opportunities. Double tops. Sells. You see the point here. Momentum, market structure, market behavior. Align them with confluence. Look for the evidence and take the trades. Let's take a look at pound yen. So what did we say about pound yen yesterday? Well, we said, what is the market doing? The market is creating structure that is pushing to the downside. We said we look for the market to pull back into some of these key levels. When we took the analysis yesterday, you can see it was in and around this level here. We want to see price pulling back. We didn't get the pullback that we was actually looking for 100%. But what can you do? Well, we saw that price went in the direction we expected it to go because price was making a structural high, lower high, and then what do we see here? Price failing to break above. Now, how do you trade this if it doesn't pull back? Well, look for an area where price is failing to break below. Once you get this evidence of price then breaking through this structure, scaling down, following momentum, you can look to jump on the trades on the way down. Now, you may have not had a trade up until about this point here because of the wick rejections, but once you get into some of these trades, then guess what happens? Stop loss, sell stop orders, then you can put your stop loss above some of these wick areas and target your 1-to-3 risk reward ratio trades. Pretty simple here, right? Now, you can notice what we're doing throughout the whole process is, first and foremost, we're keeping it simple. Secondly, we're trusting the process. And thirdly, all we're simply doing is just following what the market is doing. We're not going against it. Now, let me ask you this question again, because I think it's very valid and I think it's very useful for traders that are struggling, and especially traders that are, on my days, are still taking supply and demand trades and looking for support and resistance trades. Now, I'm not against it, but you really have to make sure you're allowing the market to build up that evidence and confirmation that you need to take those buys or sells as potential reversals at key levels in the market. Let's say, for instance, the market came back to this key level and you got those wick rejections, then, well, yeah, of course, you know, if you get the wick rejections, you get a behavioral pattern of a breakout, break back in, look for those buys. Why not? You know, the market's stalling at a key level, take the buy. You know, if you take them 100 times, you probably win. But for traders that are waiting for price to get back down to these levels and then scaling down to some of their lower time frames to look for early entries, look at the disaster that you can find yourself in. You know, you're looking for a tight stop loss because you don't really want to be patient enough to wait for the market to create enough evidence. You take the trade with stop losses below these levels. You try to target some of these levels, or a lot of traders are even greedier than that and they want to go even higher and higher. Look what happens, you get stopped out prematurely. Yeah, so think about that. Now, let's just say, back to the point I'm trying to make here. Let's gather this evidence, all right? We have a high, lower high, high, and then we see price pushing to the downside. We see that price is below the brick wall. We now see since the market's open, price is failing to break above. Now you see the momentum shift in the market. Let me ask you, you have one trade left. Okay, let's say your life depends on it. You see price coming into a level where it's reacted to before. Now, granted, we have broken it, so this might be a little bit easier, but what's the next directional bias of this candle, and how would you like to take your trades? For those that said sells, then let's see what happens, right? Look at that. The market continues down. Now, do you need to be a smart ass to say, oh, do you know what? It's time to take buys now because we're at a key level. The candle's overextended. We had a strong push to the downside. It's time to now look for a reversal. I mean, you can do that, but if given the evidence, you can do that. If not, then guess what? Just follow the momentum of the market down. And if you took this trade with an instant stop loss above this wick here and this target, yeah, granted, you may not even had a 1-to-1, but you would have won the trade and you would have won at least 83 pips from this. Or you could at least be in this trade at break even now comfortably and go for your 1-to-1, 1-to-2, 1-to-3, whatever. Now, I'm not saying trade like that because it's a bit absurd putting your stop loss above these levels and targeting strong push phase candles like this to then look for the next candle to go down. Theory works because it is illustrated every single day. Look here. Question. Bullish candle. What's the next candle? Bullish. Let's take a look at some more evidence. Key level in the market. Wick rejections. Bearish candle. What's the next candle? Bearish. Okay. So, yes, it's absurd to take a trade here, stop loss above here, but it's not wrong. It's just not my style, should I say, not absurd. Okay, so something to think about there. Next pair we'll take a look at yesterday. Now, what did we say about euro pound? We said yesterday, don't look for sells at this key level. We're not supply and demand traders. We're not support and resistance traders. We don't want to take trades just because a key level illustrates that it's a key level. We need to follow the behavior. And where did that behavior come from? Well, look here, George. It came from this area here. Price was consolidating and broke this structure. Once breaking this structure, what happened? The market came back to this level and respected this level. Now, I said don't sell here. Why? Because the momentum in the market structure's behavior along with structure was illustrating it's more bullish than it is bearish. So if you sold here, what would have happened? Well, I'm afraid to say you probably would have been stopped out royally. Okay. Now, what do we see the market doing? We saw the market break out. Now, we want to see price get back to these highs. And while we're here, we might as well make this very clear. Now, you can see price had a really strong push to the upside. And that push from this retest level here was about, 23 pips. Now, how you could have traded this was scaling down some of your lower time frames. And what you could have been looking for is how the market was moving after this break. Now, granted, you don't have the best evidence here on the 5 minute. So that's why I use all other time frames as well to trade. But let's say here now we have price pushing and breaking above this structure. Now, what do we see? We see a trend to the upside on this market. As you can clearly see, price creating higher highs and higher lows. This is very evident of price keeping above this brick wall. Now, once price creates a level in the market, what you want to be waiting for the market to do is come back to that level to then show that it's respecting that level and that the bullish momentum's in your favor. Once you have that, you can look for your pin bars, engulfing candles, or however you trade, and then you can look to trade this with your stop loss below the key level. Now, you're trusting the structure. Let's go for 5 pips here. You're trusting the structure. You're trusting the momentum. You're trusting the pattern as a double bottom. And what can you do? You can target some of these highs, which would have been around 4.68R, or as I do, just target your 1-to-3 risk reward ratio trade. And then guess what happens? Bob's your uncle. Okay. Now, I'm not saying scale down to the 1 minute. What I'm saying is that patterns, structure, and behavior is consistent throughout all time frames. So, for those that are like, well, rocks, you keep changing your time frames that you're trading on. Well, listen here, George. I trade all time frames because it's the same thing. And if I can't find an opportunity or a pattern on, let's say, the 30 minute or the 15 minute or the 5 minute, I'll use the 1 minute. And if I'm not comfortable with the 1 minute for whatever reason, then I'm going to trade the 15 minute. And if I'm not comfortable with the 15 minute, I'll trade the 5 minute. Whatever floats my boat during my trading session and what's relevant to me and what makes more sense to me is what I'm going to use to my advantage to trade. Because guess what? I trade structure and I trade market behavior. And that's it. Simple. It's all the same thing. Let's take a look at another pair. Euro yen. So yesterday we spoke about this as a potential reversal, or just to look out for this potential reversal on this market as a consolidation. We said look at this 2 taps, 1, 2, and then watch how the market may react. We see this is a downtrend, so it's completely fine, and we can also see that price isn't taking out the previous structure. We have price holding, and as you can see, we make a lower high. Now for the session, you can see we made a a lower high within the within this consolidation here, and then look what we have, a momentum shift down. Okay, how you could observe this if you're looking to trade it is identify the lower lows and lower highs that's being forming within this consolidation. Look for the multiple wick rejections, as you can see here, 1 2 3 4 5. And then how could you trade this? Well, look, you could be trading this back down to the bottom of the range only first, because you need to make sure that you get a break-even trade, so stop loss above some of these key levels. Do you have a 1-to-1 risk-reward ratio before price gets to these levels and fails to break? Absolutely do. And then what can you do here? You can target your 1-to-3 risk-reward ratio. Again, Bob's your uncle on this one, okay? So be mindful of it, look out for it, and yeah, keep it simple. This one was an absolutely gorgeous analysis. Do you remember this? We put our brick wall here. We said identify how price is making these higher low formations, which is these patterns here. So this was one, this was higher than the previous, this was higher than the previous, and then we had the break of the structure. We said, look how this brick wall is forming as a trend up, trend down, trend up, trend down, beg your pardon, higher high, higher low, higher high, higher low. Look here, we was looking for the retest of this level right here. Look at that for a gorgeous retest. What was our targets? Structural highs, baby. Structural highs. Please, nobody, respectfully and humbly, I'm just telling you now, please don't question technical analysis. I mean, when you study market structure and you understand how the market moves every single day, and I mean every single day, and you know how to identify momentum based on the fact that the market creates it every single day, just trust me, man, when I tell you this. Doesn't matter what results I show you, what proof that I've got for you, just look at my videos and see the consistency with the analysis. I'm telling you, this is not a fad. This is real talks out here. And if you take your time to study this and understand this, then believe me, you'll be in a great place. Now, I've just seen this here, which is this wick, right? So if you did take this trade, you've probably been wicked out, which is a bit of a shame. So not everything works out perfectly, right? But what we can do is take a previous structural high, which you see here, after being wicked out, you take a loss. Last night, Asian session, I took 3 trades, lost 2 on 1. Then this morning, I took another trade on GU, lost it, and then won 1. Sitting nicely at plus 3R. I haven't taken another trade yet, but we'll see what happens. But as you can see, if you did get wicked out here, which you probably would have if you took this trade, which was this morning, which is fine, you're going to have this manipulation. That's what you can do. Wait for price to take out the high, look for the momentum shifts, and then once you get the momentum shifts, look here. Now I'm going to explain this to you, right? You get the break and a strong break above this structure. Now once price closes with a wick rejection here on the lower time frames, this will create a higher low formation. Now I don't even need to go down to lower time frames to know that. I just know that. Now what I classify this as is a 50% retracement of a previous momentum candle, and then scaling down, what you can look for here is price creating that trend to the upside. So after that break, you have that push, you have that pullback, and then you have that 50% retracement. How could you trade this? Well, it's down to you. You can look for wick rejection, so you can just wait for price to take out the previous structural highs with your stop loss below these levels here, and then you can target your 1-to-3 risk reward ratio trades. So not cherry picking here, because let's say we did take this live, we would have taken 1 trade with a stop loss. Then you take a continuation of this, not changing your bias or getting caught up in your emotions. Wait for the break of the structure, wait for price to create that higher low, 50% of that previous momentum candle. Look for your engulfing candles, or just look for a buy stop with price continuing that momentum to the upside. What would a buy stop look like? Well, it would look like this. And what are we anticipating when we look at the structure of the market? Well, we're following the confluence that has been illustrated already, and we're suspecting that the price will make a higher high, higher low based on a pullback, continuation of this previous momentum. Remember what I said? If this is strong bullish up, where are you putting your money? Are you buying or selling? I would hope most of you would say buy for now, and then you set your buy stop, and then guess what? Bob's your uncle. Bob is your uncle. Smash targets, and that's it. We move on. CAD Swiss franc, I think we avoided that, and that was it. So yeah, hope this was useful. Just giving you some, something to think about. And as I always say, this is not financial advice. This is just of my own opinion. So what I'm saying right now could mean absolutely nothing to you, and it may not work for you, because what is happening now is not representative of future results. What I can tell you is structure is structure. If you enjoyed this video, please smash that like button, subscribe if you haven't, turn on notifications, and until next time, trust the process, baby.